I'm Jessica Minton for IB Times TV, and I'm joined by Joseph Greco from Meridian, who's going to talk about earnings season as well as what to expect with tomorrow's GDP number. Thank you so much for joining me. It's a pleasure to see you again.
Thanks for having me.
Absolutely. So with earnings season right now, about 70% of companies have beat estimates, but 66% of those have missed revenue forecasts. So why is the S&P 500 still trading at all-time highs?
Well, keep in mind there's always that best of breed situation where people do reward the companies that are doing both top and bottom line revenue growth and are investing their monies and their proceeds properly. We've seen that time and again in these last 2-3 quarters where the winners get rewarded handsomely and unfortunately the losers are the ones who miss and revise post guidance that is negative, get taken out to the shed. So at this point, I think we're seeing both a continued roll into the best of breed in each class, and of course the pedal down policy, which is the federal involvement in the marketplace, the Federal Reserve involvement in the marketplace.
Now this week we have seen some mixed data with the durable good orders plunging and then that ISM number for manufacturing. Is sometimes bad news good news because the Fed will end up printing more money?
To really get to the heart of it, I think the answer there is yes. Clearly we've revisited the debate back and forth as the market continues to go higher. Is this all Fed driven, and is the Fed the never-ending bid here? When there was even a hint that the pedal was going to be lifted or the foot was going to be lifted off the pedal, the market did pull back just slightly, but then Bernanke came in and reassured us that that's going to last at least through the end of the year. So at this point, I think the unwavering commitment to asset purchasing is really what's keeping the market in this momentum.
Is there ever concern that the Fed's quantitative easing program will become less effective?
Surely. The immediate answer there would be when the policy ends and when they decide whatever the pace is, whether it be an immediate stop or a varying the pace first and tapering off, that is going to have some repercussions in the marketplace. And then we're going to either see whether or not the investor believes that the economy is healthy and these corporations are doing the right things, or we're going to see if we need continued involvement.
And finally, tomorrow we are going to see that U.S. GDP number. Do you think we will see it come in at 3%?
I think some estimates are right around 3.1 or so, and I think that's probably where we'll come in. I'm not anticipating a beat by any means, but I really don't see why that number should fall back, not being a mega economist or anything, but by all indicators it seems like we're hitting pretty close to target. So without any major changes or tweaks of numbers, I think that's where we're going to end up.
Thank you so much for joining me. It was a pleasure to see you again.
Thanks.